much like the internet, people are overestimating the short-term impact and grossly underestimating the long-term impact.
Hi everybody, this is Masha and Xenia from Value.Tokenized. And our guest for today is Gregory Keough, CEO of Finova Financial and Blockchain Credit Partners. We're discussing the specifics of tokenizing a high-yield private credit fund, Greg's vision on stablecoins, and investment opportunities in the United States. Hi, Greg. Thank you very much for joining us here at Value.Tokenized podcast. To start with, can you share what was your career path, what you have been mostly working on, and what you're currently focused on right now?
As you can likely see, I may be a senior citizen in the blockchain space, actually, because I've been a fintech entrepreneur since like the 90s. So like when the internet was just coming out. I actually had a company called Zona Financiera. It was one of the first kind of online financial services companies, and Citigroup acquired the majority of that. And I also built very early on one of the early mortgage platforms in the United States. So spent most of my career basically building fintech startups that kind of looked at doing things differently, like solving a key problem like the mortgage business, but doing it all online and going back to the 90s. I did, prior to Blockchain Credit Partners and Finova, the stuff I'm doing now, I did do one kind of corporate stint where I was the CEO for a joint venture between MasterCard, who I'm sure you're familiar with, and Telefonica, the large global telecom player. And I ran all their mobile financial services in about like 20 countries or so. So basically the basic idea was using mobile phones to bring people kind of or underbanked people into the financial system to do transactions. So did that for a while, was great, but I traveled a real lot and I live in Florida. I have 5 kids. And as I always say with travel, I like to see my family. Some people love to travel because they never want to see their family. I like to see my family. So it was just literally I was on a plane every week. So decided to leave that CEO role and start a company called Finova. And what Finova basically did was, or still does today, is digital lending, again, to the same group, this underbanked group in the United States. And a lot of folks don't know it, especially international folks, but like about half the people in the United States can't come up with $400 if they have some sort of financial emergency and need it quickly. And it's kind of like a shocking statistic to most folks. And they tend to be the same kind of 28% Americans who are kind of or underbanked, meaning they don't have a bank account. And so we basically developed Finova to kind of solve this in an all digital format. And what it basically does is allows them to, the main asset they have is actually a car. They don't own a home. So we actually have a system where but in the same day, very quickly, like 30 minutes, you can get cash using your car as collateral. So that is actually how we kind of migrated into the Blockchain Credit Partners, because it's a product that is a novel product in the States, but it's a very stable, high-yielding product off a secured asset. And that's kind of how we started to say, hey, this would be a great asset class to tokenize and make available to people broadly. And that's how we kind of got into Blockchain Credit Partners. We come as operators with 4 years experience kind of doing this business, but we said this is a very unique asset class because if you look globally, I don't know what the rates are right now in Moscow, but interest rates generally are very, very low, right? So you have, Japan has negative interest rates. Many places in Europe still have negative interest rates, and it doesn't look like that's going to change. So the ability to take loans that are secured by real physical assets that have an attractive ratio, loan to value ratio. So generally these assets, they may be worth $10,000, but we only lend maybe $5,000. They tend to be very good at producing traditional, cash flows, very consistent cash flows that are high yield, like 10% or more yield. And that's what we think is one of the kind of killer apps in the digital security space, because it's something that's not even available to very traditional investors, right?
Yeah, and but why blockchain? What made you think about it as the good technology and underlying technology? Like, why tokenize?
So it's funny because everybody has the stories kind of like how they got into the space, and I'm no different. And actually, it was like 2011, and I have 5 children. My eldest is a big gamer, and so I told him, "Hey, you have a really good gaming platform." And they go to this private school, and all the other kids had good gaming platforms. And I said, "You should put these things together and mine Bitcoin." And so back then the price was like $4, and I chuckled because I did not think they'd make any money. I wasn't telling the dude to make money. I was really just saying, hey, you learned something about a new technology that I think is going to be important. And I even got calls from some of the other parents saying, what are you telling our children to do? And is this legal? And, they're going to get in trouble. I was like, no, listen, they're just going to learn something. And so fast forward, because they're mining at $4 when you could still do it with those kind of units. A lot of these folks made a lot of money, paid off their mortgages, paid for their college and all this other things. And so then it was a great idea afterwards. But that's kind of how I first got involved, because I followed basically as a fintech entrepreneur this stuff very closely. And what I really think that is specifically what we're doing now, why blockchain and is important, is that if you look at the tokenization of assets, right? Like I think that's going to be one of the biggest things. You saw the CEO of Goldman Sachs recently came out saying the same thing. We've been saying this now for many years, but I think more people are catching up. And I keep coming back to like solving basic problems, right? So if there's a basic investor interest globally to say, hey, I would like to invest somewhere where my money's secure, but where I could live off kind of the payments, right? In the old days, people would live off interest payments. They'd save up money, they'd put it in a bank or they'd put it in bonds or somewhere, and they could live off those payments. Now with kind of zero interest rates almost everywhere, it's almost impossible. You really can't do it. But those people still want to do it. So using this, I mean, there is a realm called private credit. Private credit is about $1 trillion industry globally, but it's very fractured. So these deals are very hard to find. The deals, and I'm referring to deals that are yielding like 10 or more percent, that are secure. So I think that we've seen there's a lot of appetite for this, but it's very difficult for like normal folks to get involved. And we were doing this product, which yielded between 20 and 15% for the last 4 years. But basically the people investing in it were a bunch of billionaires. So it was people of ultra high net worth, ex-guys who were investment bankers. They were very sophisticated. And really what we said is like, why not take this product, tokenize it, then we could actually put it on also an exchange where it can trade. And this will open up this ability to invest to many, many more people. Because the real, the people who have $1 billion, they do have access to these types of private credit opportunities. But generally the way they're structured, you have like $1 million buy-in, you need to keep your capital locked up for 7 years. So it's very, it's kind of clunky. So we said, hey, by tokenizing the Blockchain Credit Partners Fund, which is only looking at investing in, again, secured lending, we could produce this same opportunity, but for many more folks. And then by tokenizing and putting it on an exchange, you also have the ability to get liquidity and come in and out of it. So that was the reason that we think it was important. And I also think it may be one of the killer apps, because you look at kind of security tokens and, everybody believes the market's there. We all believe it, but it's early on still. And I think one of the things we're missing is kind of this killer app that appeals to both kind of crypto folks as well as traditional investors. And I think what Blockchain Credit Partners is doing kind of bridges that gap.
So your main focus is retail. So it's retail investors, just regular people who can step in to do that?
So in the United States, the BCP, Blockchain Credit Partners Fund, you have to be an accredited investor. So we're using Reg D. Internationally, we're using Reg S. So it means it's much more available. But yeah, I mean, we have obviously institutional folks. We have other things, people who want to come in. But where I really see the most value is actually to normal people, who may have $200,000 sitting in an account getting no yield, and say, why not put it over here? I can get 10%. Maybe I can live off that, and or at least help. And but I can also trade in and out of it because it will be on an exchange and traded. And we partnered with Securitize, and you probably know Jamie and Carlos well, to do that process.
So it's democratizing the market.
Yeah, and that's why I think that's what we're really excited about, again, is because I know for a fact, like, private credit is available, but generally to folks who have, you have to have $10 million in assets. So by taking this and formatting it the way we're doing it, we're making it available for more, everyday investors to have the opportunity to get into this type of opportunity. And we see a lot of demand from folks, and especially internationally. Because many people would like to diversify out of their home country, just some of their capital they'd like to put in another country. So here in the Blockchain Credit Partners Fund, it's only US assets. And then secondly, they want it secure. They don't want to lose their money. So they love the fact that it's secured by real assets, in this case, autos. And then lastly, they want yield. So the fund is structured so, the targeted yields between 10 and 15% to the people who are getting involved in the fund.
Can you run us like super quickly through the process? So how does the process look for an investor? Because it is, blockchain technology that not many people are still familiar with it. So how does it look for the process, like customer experience for this?
So again, so there's two ways to get involved. So one, if you go to our blockchain credit partner Sun, you can sign up and do the initial like KYC and AML and stuff like that, just to make sure that you're qualified, et cetera, because we want to be mindful of people's times. And then we are using Securitize to actually tokenize and distribute the tokens and manage the tokens. And then after that, we will be placing it on one of the ATS exchanges, of which there's many, to trade basically. And we are working now too, because we've seen a lot of interest internationally with kind of brokers and broker dealers and others who are very interested in kind of high yielding credit opportunities. And this seems to be a very good fit. So we have broker dealers kind of in Latin America. We're talking to folks in Japan, et cetera, because we think that's kind of a great add-on to your portfolio, right? You may not want to put all your money in, but you could take 10%, maybe park it here in the US, getting yield, et cetera. And people seem to think that's pretty appealing for international clients.
And what about tokenization of fund? Can you maybe explain what it means and why should you tokenize a fund? And is there any specifics about tokenizing a high yield private credit fund? What's the difference, if there's any?
So one of the things we're doing a little differently is you actually have the option in the blockchain credit partners fund to tokenize or not tokenize. So we have some people who are very traditional and saying, listen, I just want the papers and I want you to send me a check. That's okay, that works. However, those who want to tokenize, and we do encourage this, and you can decide to do it later on, that's not a problem. The main benefit we see is that if the fund's yielding 10%, and then it is tokenized and it's trading on an exchange, there's many people who probably would be acceptable to putting money in at maybe 6%, right? So by having it trade on an exchange freely, we believe the token value will actually go up, getting to whatever the correct nominal yield should be. Now, so if it's saying like 10 or 15% steadily, people probably are going to bid up the price because there's a limited amount of people who could be in it, up higher because they would accept 6% yield, right? So the way to get in would be to buy other people's tokens. So we feel that if you don't tokenize, you're actually leaving one of your profit possibilities off the table. But again, that's up to the person. But we do think, and it kind of makes sense because bonds work that way, right? I mean, bonds, you change the price, right, to get the yield. And so we do believe it will act that way once it's trading on an exchange. And then the secondary thing is many private credit funds, or almost all private credit funds, make it so the person is locked up for like 7 years. So this gives you the ability, if you would like to sell, you sell the tokens on the exchange and you can have more liquidity come in and out of it. So we think those are kind of major differences in the way that blockchain and tokenization help us in the fund side of blockchain credit partners that is kind of unique.
Greg, and you're also the founder and the chairman of an institute for blockchain innovation. It's like a think tank for digital securities. So what are you focused on there? And also, like, what is the most, like, other really exciting opportunities that blockchain as a technology and tokenization opens for traditional markets?
The Institute for Blockchain Innovation, or IBI, because as you can see, it's very long to say, we started a couple of years ago, and it was actually a very simple idea. So there was a lot of hype, as a lot of us remember, surrounding ICOs and other elements, which unfortunately, some were okay, some weren't that great. But the main focus at that time was, this is a huge technological shift. To me, it reminds me of like the internet. It's that big. And I thought it was getting kind of hijacked and ruined, unfortunately, by some bad actors. So the idea was simple. Let's get together a group of folks who are building real projects, thoughtful leaders, people with experience, and bring them together under this one organization. And the easiest way to explain the IBI, again, is focused on digital securities, right? And digital payments using blockchain. So those are two, we're kind of narrow in focus, but it's easiest to explain what we don't do. So we are not trying to start a conference. We are not trying to sell people anything. There's no cost to be a member. And all we really do is we're bringing together the global leaders in this space. And then we have a once yearly meeting where we get together, we have a dinner, we have a nice time, but we also talk about the industry and how we can work together to build it. And then during the lapses between this events, we actually connect people who are building interesting stuff. And so it's limited to just 100 people. I think we have about 30 people so far globally. And so it's kind of, that was the genesis of it. And I think it's been useful because, as you can see, it's such a huge opportunity. And we have many, many people. And one of the things we tell people when they come in is you have to be comfortable having competitors because it's so large, the industry, that quite frankly, we all need to cooperate. And so you'll see, like, we have, certainly Securitize, we have Carlos and Jamie, but we also have Trevor and Chris from Polymath, and we have so it's really bringing this community together and talk about what everybody's building, and it's a really nice thing, as I say, because we kind of brought all these global leaders together, and it's fascinating to see how everybody's trying to reimagine the industry.
This is very important. And do you think that maybe connection and also education is something that can push the industry forward?
So definitely so a lot of what I do is the IBI, and this is very informal. People call me up and say, "Oh, I'm working on this, and I heard so and so was doing this." I said, "Well, yeah, you should probably talk to him." And so we kind of help connect those dots. Globally, we also see that there's lots of education, as you guys are doing a great job with as well, and just making people aware that like this is a huge change. It is going to probably impact everything, or at least I believe it. I believe you guys do too. But people are still kind of coming up the learning curve. So we do have things where, the IBI is trying to help either governments or companies, et cetera, just think through informally, like, hey, what should your strategy be? How is this going to change? What do I need to be thinking 10 years out to kind of be in the right position? And again, we're starting to see, which has changed over the course of the IBI, is that initially people were like, what are you talking about? They kind of like, they just didn't even get it. And it's kind of, it was interesting and gratifying that people have kind of changed. Now you see everybody's pretty much talking about it. Yeah. But we're still early on. And the second area where I actually think we're very interested, I'm very bullish actually, is in kind of stable coins, but stable coins actually different. Like and this is very personal to Greg. I actually define stable coins differently than other folks. So like, I think a real stable coin is a non-sovereign, non-fiat based coin, right? And not to say that you can't have coins that are obviously like Libra and others that are trying to do these things, but I actually think the killer app, and this is where debt comes into it. That's why I think a lot of times people say, actually the blockchain credit partners fund is actually a stable coin because it's going up in value constantly because we're giving yield, but it also has this base mark of real hard assets, at a very low valuation that keeps it stable, and it can also be, diversified. So I think that we're going to see more and more people building what I term real stable coins, right? So these but through the tokenization of assets, because I would argue personally, like, I believe hard assets, real estate, these other items that can be tokenized are probably more stable and predictable than a lot of our governments, right? And land has been around forever, right? Now, and it's certainly appreciated. It comes up and down, but like, it's these things I think are ideal to start building some type of stable coin, because I think you really would get it. I mean, generally the governments aren't taking away land. I mean, it does happen in some instances, certainly. But if you look at kind of the building things around these kind of hard assets that are tokenized, I think is going to be a brand new huge industry, because I think a lot of investors are interested in that because they see many governments are spending money out of control. And so I think that's going to be a huge area of growth in the future.
And do you think this is something that we should look forward to in the next, like, let's say 12 months? Or what else do you think what will happen in the upcoming year that we should, keep an eye on?
So I think everybody, like, if I always, this is very analogous to me to the internet. So in the internet, the only difference was the internet was much easier to explain. You could say, like, listen, basically the internet communication is going to be free, instantaneous, and everybody's going to be connected. And so everybody kind of got this. When you try to explain blockchain, as we all know, it's hard to kind of get people to understand it fully. It's a little more difficult. I do think, much like the internet, people are overestimating the short-term impact and grossly underestimating the long-term impact. Because I think when you have cryptocurrencies and AI all meshed together, everything's going to be settled this way, right? It's going to be a fundamental, huge change. So I think 12 months, I think we'll probably see some movement, obviously, in both the exchanges and new funds and security tokens coming out. We're still early. There's still, a handful of these globally. I do think traditional investors are getting much more interested in this as an asset class and can now start to see more than just, a lot of people just see Bitcoin. Bitcoin's certainly a use of it, right? But it's one of many uses. So I think short term, we'll see some of that. Longer term is where I'm extremely bullish, but that's kind of probably 4 years or so out is where I would start to see. I think we're still putting in the building blocks, but much like the internet, without the building blocks, you can't have the impact it had today.
All right, I think that was it for today.
Yeah, I think that was our final question. Thank you so much for joining us, for sharing your knowledge and sharing what you do.
It was a pleasure.
Thank
you.
Thanks so much. Great talking to you guys. I appreciate it.
Thank you for watching Value.Tokenized.
Don't forget to subscribe to our YouTube channel, to our Twitter for shorter versions of the video. And if you have any questions to our speaker, don't forget to ask them in the comments.